Hello all, happy Diwali, belated happy Diwali. Hope you guys enjoyed your Diwali well. And I couldn't able to release this video earlier, thought of because I normally release a video in the weekends, so it's a tight time for me to edit and make the video, write the script. All those things cannot happen the weekdays, so I have to normally work on the weekends to release these videos. So better let's get into the video. Today lot of people asked me to find a stocks under 100 rupees. I tried my best to find some best stocks which are under 100, but few stocks are like under 150 rupees. But these stocks which I'm going to talk about are fundamentally strong stocks, and this also good for your long-term portfolio, not just for your swing trade. So hope you like this video. And one more thing is, I'm not a SEBI registered advisor, so I cannot recommend or give a buy or sell kind of a thing. So it's just for education purpose. I'm going to show you what are things I understood from my learnings and what are the pros and cons of the companies I'm going to list out. So you do your own due diligence if you want to invest in this one, or seek a financial advisor or SEBI registered advisor. Let's get to this video. This is Sundar and you are watching Mindful Finance. Okay, so as I mentioned, today we are going to check couple of stocks or 4 or 5 stocks which are under our budget. So let's get into the details of this the stocks. The first stock which I'm going to talk about is company called Medico Remedies. Medico Remedies is started doing 1994, and they have been manufacturing a wide range of pharmaceutical formulations. This includes everything from antibiotics, anti-infectives, anti-malarials, anti-ulcer drugs, and even vitamins, and also supplements they are manufacturing. The portfolio is very diverse, and most of the things are in oral medicines, and also they are manufacturing some therapeutical ointments and other things, and also they are focusing on diabetic medicine and chronic pain kind of medicines. Those also they are manufacturing. So they are in a very diversified market. Okay, and geographically they are located in Maharashtra, and that is a hub. They're also getting benefits from government policies, government infrastructure incentives. All those things they are getting from government, so they are able to sustain and extend their production capacity. And the future growth perspective, if you see, the medicines which they are manufacturing are getting a global visibility, and global demand is constantly increasing, and they are getting a constant orders to export. So export revenue is going to be more in the coming future. A few fundamental details are like their market cap is very small, 465 crores. The reason for this 465, why I picked, there are multiple stocks which like Dr. Reddy's, Natco Pharma, all those things are there, but I picked this one because this is a very like a micro cap kind of a thing. This will have a huge potential to become a multi-bagger easily than the big companies. Even though the PE is 54.4, it is having a very good trajectory here, because the reason behind is, if you see ROCE 21.3%, ROE is 17.2%, so which clearly shows how they are utilizing their capital. And this company is almost debt free, and their free cash flow is very good, and the only problem concern is the dividend payouts they are not currently handling it. And if you see the EBITDA growth, sales growth, all are like consistently increasing. And if you go to check the EPS growth, it is almost 39.4% over 5 years, which is a very huge number. It's a very good sign for a growth company. So let's see the technical part of Medico. If you see, let's start from the monthly view to get a holistic picture. If you see from the IPO, it went like anything, and it corrected, and it again tried to break that high, and again corrected. And if you see, it has taken a support here, which is a Bollinger Band. You can see the Bollinger Band bottom portion it has touched, and it is getting reversal. Let's go for a weekly view now. Weekly view, if you see, RSI is slowly get above 60, so it is getting a momentum now. And if you clearly see, it is breaking the this trend line over here, this bottom of this the big candle over here. Let's go for a daily now. You see very nicely it is breaking out. Check out the volume over here. So it has a very good potential. In the short term, it has a potential to touch this trend line first. and after that it may form this triangle pattern to consolidate like this, and then it will break out. So it has a very good potential from here. If you see, almost 73% it has a potential, and this is for a short term period, but it has a, in the longer term horizon, it has a very good potential. So and this is the right time. If you see, the volume is very good. Make sure RSI also above 60. So slightly, because of the big candle, normally what happens is the big candle will try to retrace. Okay, so just keep a tab. So and this is the right time, I would say. The next company which we are going to check is IFCI Ltd. It's a Indian government supported bank. It's a NBC non-banking finance sector, and it has achieved a profitability during the year of 2023-24, because still earlier it was facing a lot of troubles. It was in a downside and lot of problem it was facing earlier, but recently it has recovered its NPA in a very good way, and it has shown the power to bounce back from where it went. The recent things based on the inflations, based on the, so they have created a very good base now, and also they have given a good provision for the future thing. The only problem here is its capital adequacy ratio, which is almost in negative now, but they are trying to recover from all those things. It might be sorted down in a recent time. And if you see the treasury management, they are having a very good diversified way of managing it, and they have only a very low risk instruments they focus. So that way they are reducing the volatility and the risk level. The recent the recent profit after tax is 128 crore, and total income has increased increased from 755 to 896 crore. And NPA recovery also almost like 940 crore they have recovered, which is a very good number for a small bank financials. And if you see the debt to equity ratio, it is 4.49. That's okay for a banking finance sector. It's okay. ROC is very good, like 10.2%. Since it's growing from the lot of problem, so that it's moderate, but still it's a good position. So see, that is how we need to focus any of this thing. Like whenever it is in a downtrend and it is trying to recover, so that is where we have to focus. After it got every problems are solved, and if it is gone to a very high price, then focusing on those things will not help. So this is the right time to look into that. As I mentioned, only problem is capital adequacy, and provision coverage ratio is over 90.62%, which is a very, very, very good number. If you check the technical, if you see for a very long time it was in a sideways, you can see how it was like, it was trading within 15 rupees range, right? So the initial days during November 10 2010, you see it went to almost 78 rupees, and again it touched the 78 rupees mark, and it fell, and it has taken a very good support now, and it is currently trading at around 57 rupees, and you can see how it is bouncing back now. We go for a 1 day view, you can see the volume also is very good volume, but it is trying to consolidate over here, but it has shown a very good reversal sign, and this is a sign for entry. If you are scared, you can have a stop loss here, and you can continue, but it has a very good potential to grow from here to almost 58% from here, but it has, in the longer run, it has a very good potential. The next company we are going to look at is L&T Finance. So they are into diversified sectors. One of the sector is farm equipment finance. So they give the loan for agriculture base. So basically, L&T Finance formed to support their own business, which is L&T Infrastructure. So which is mainly to give loan to L&T Infra, but this got evolved into a diversified loan provider for small medium business and low and medium income people. So one of the sector is where they give loan is for farm equipment. They have almost like 170 branches across rural India, and they are serving 11 lakh customers. And if you see, 93.3% is a collection efficiency. That is a very good efficiency. And the other thing is they are focusing on the two-wheeler finance. So mainly they are located in West Bengal, Maharashtra, and Gujarat. And see, the two-wheeler finance is something like a volume-based business. But the main thing to note here is the people who are getting a loan are like a low-income or mid-class people. So where the returning the loan is, repaying the loan capacity is very good. You can see almost 98.7% the efficiency. And other thing to notice that their digital transformation. If you see during FY21, only 14% were digital, and now 24, if you see 91% are digital servicing, and they are trying to get AI feature enabled in their bank as well. And looking at the liability mix, they are getting funding mainly from bank loans and NCDs and ECB and CPs. So, but most of the loans are the funding they are getting from banks. Next one is a debt-based instrument. If you see the finance ratio, CRR is 22.84%, which is like very good one. Normally 8 to 12 is used to be say that it's good, but they are having 22.84. And net interest margin is very good. Credit cost is 2.45%. All these numbers are telling a growth, and it's very good. So if you check the technical part of L&T Finance, you can clearly see it is in a rising channel. It is trying to touch all-time high and it fell. If you see, this was the all-time high. This was happened during 2017, and it came closer and it has again slipped. But if you see, it is making an expanded flat pattern. The expanded flat pattern is maximum. What will happen is I'll show you how it normally forms. So A, B, C, D, and E. So this is the expanded flat pattern, and this is making this particular specific pattern. It's a good time to accumulate now. If you see the potential, it can go to from here another 51% you can see, and if it gives a breakout, it will be like this much you will get from the breakout. Okay, and from here you can see 120%. So this is a multi-bagger one. Just focus on this one. The next stock which we are going to company which we are going to discuss, Gateway Distriparks Ltd, is the one of the India's leading integrated logistic companies providing inter-modal solutions for efficiency cargo movement, and the service spans the entire logistics chain from inland container to container feed stations. And also the main thing is they are having a temperature controlled logistics also, which is a very important going forward, where the frozen food concept is going to be more in India. Talking about the business model, so Gateway Distriparks operates through three main verticals: ICDs, CFS, and temperature controlled logistics. The inland container depots are rail-linked facilities connecting key industrial hubs to ports, enabling seamless movement of export and import. And the CFS facilities located near major ports provide customs clearance, warehousing, and container handling for efficient import-export operations. They also have stake in Snowman Logistics, India's largest cold chain provider, which is crucial for temperature-sensitive cargo like pharmaceuticals and food products. So as I mentioned, their main business models are integrated solutions and temperature control logistics. So integrated solutions are mainly based on the railroads, and the temperature controls are mainly they're having a partnership with Snowman Logistics, and mainly used for wherever you need a temperature control one for like medicines, cold storage foods, all those kind of things. If you see the performance of Gateway Distriparks, its revenue was around 1,553 crores, which was almost like 100 crore more than the previous one. And the PAT, profit after tax, has been grown to 258 crores. EBITDA margin is very good, which is at 26%. So currently, their ICDs and CFS, they have a very vast land to store, and they have an expansion plan of 1,25,000, and also they position such a way to benefit from the Western Dedicated Fleet Corridor. The main risk and challenges, they have some kind of ongoing disputes and IT related issues, but they have already filed those things from their side and trying to solve those things. So they have a little bit of legal issues going on, which is the liabilities of 85 crore. Since it's a kind of a micro cap company, so for them it's a big number, but it seems like they can solve this problem. Okay, and also this is mainly they are dependent on the trade based one. So if anything stopped, the transportation or the cargo thing stops, then their business will be stumbled. So these are the very key risks. See, every company will have a risk. So the nature of this business is a trade. So if trade stops, obviously they will have a problem. PE seems to be 19, which is a moderate PE, and they are also giving a 2.3% of yield of dividend, which is also good. And ROC and ROE is a very good, like 12.5 and 13.4%. So a business like a logistic where more infra involved, where they are able to do ROC 12.5 and ROE 13.4 is a very good sign. Let's look at the technical part of Distriparks Ltd technical details. If you see, this is the all-time high, which was 109 rupees, and it recently tried to touch that one and it fell down and it has come to 81 rupees. So it is in a rising channel pattern. So see, this is what very good sign. This kind of a sign is a momentum sign. Like when you see, we have two dip over here. Okay, what will happen is the second dip, if you do a retracement check, so possibly it will go to 181 rupees. Okay, so yeah, so it has touched the bottom of the RSI and it is reversing, and you can see the volume also is good. Volume also seems to be good, and it has clearly broken out, given a breakout here. It is trying to sustain, trying to break out further. If it is continues, surely in the short term thing itself, you will be getting around 35% of return in this stock. So yeah, keep a tab on this one. The next one we are going to discuss is Punjab National Bank. So I think most of you are aware of this banking sector. This is a very good bank. It's a very big bank as well, and it also faced a lot of problem, but later it has recovered and it is in a very strong growth path. Every bank is struggling right now, but this bank, if you see, not much like my other banks. So compared to banks like Bandhan Bank, other things, so it also went down, but the recovery seems to be more better than Bandhan Bank and other banking sectors. Other banks, the main thing is these banks support also their own other bank, which is Punjab National Housing Finance. So they provide funding to Punjab National Housing Finance also, and they are into all the mid and low segment, which is like retail bank, agriculture, the loan for agriculture, small medium business loans, education loans, and also they're more focusing on the corporate banking as well. So since they are working more towards recent digital transformation, it is really helping them to everything through happen through online, because this is going to be very crucial, because we are talking about AI and other things, and if your bank is not even equipped with a digital thing, you will be like left alone. So in that case, PNB has almost secured their place. Their digital transformation are almost done now, and because currently everything is happening through online. So their recent PNB One mobile app has been a very good hit, because it's been getting a very good review also. You see the PE ratio is very less, 7.92, and PB is, you just look at 0.9 and less than 1. For a banking sector, less than 1 is a very good sign to focus. Market cap is almost like 1,14,000 crore. It's a big bank. Market cap is very high. So growth wise, making a 2x, 4x or whatever it is, it may happen, but it will take time. Okay, because the market cap wise, it's a very good position right now already. And if you see the returns and other things, ROC is 5.46, ROA is 0.59, ROE at 8.5. These are little bit lower side. As I mentioned, they are recovering from a lot of issues. So from that perspective, it is good for now. And EPS is very good, like it's 191% over 5 years. And revenue growth, it's growing beyond our FD return, which is like 10% CAGR. It's a good sign. Okay. And also from the NPA side, they have reduced a lot from the NPA side, and free cash flow also they have increased to 332,000 crore over 10 years. But recently there is a negative trend. Their cash flow is going down. So we need to find out why it is going down. So that we need to probe better. We need to have a tab on that. And dividend, they are paying a very good dividend. So 18.1% payout, which is like 1.51% yield. So they are paying a good dividend also. If you look at the future growth of PNB, so digital transformation, they're almost done, and sustainable financing, that which is like since the growth of India economy is going to be green, which is carbon neutral, all those things. So they are giving more loan for green based initiatives like electric vehicles and renewable energy projects. And the main challenges are as usual, like macroeconomic volatility, like inflations. People may not try to spend or buy loan, right? All those things are there. So those are challenges. It has shown a very good recovery mode right now. It looks like more potential for this to grow fast in the coming days. If you see the technical part of PNB, it also like almost like you can see Punjab National Bank. Let me close. And if you see, it has a big trend line over here, and it broke the trend line, and again it came inside that one and trying to break again. So you can try to slowly start adding this one. Don't get into bulk mode kind of a scenario. You see, it is at the support level. Okay, and so you can have a stop loss or anything over here, and you can continue. So it has a very good potential because the PB is less than 1, so it will surely will grow and hit a very good momentum. So almost it has a potential to grow 180%. So don't miss this opportunity. So next stock, I don't want to give more fundamentals because these are known companies, but it's the right time to start your focus to this particular company, which is SAIL, because the cyclic nature of a steel is going to come back. Okay, so this is going to hit a more demand. So if you see, this is the trend line. It broke the trend line, and this is another support level. It is testing this support line, and it is going to recover. And see, this is a higher high and higher low formation. If you see this part, right, so it is clearly making higher highs. So it is clearly making higher highs and higher lows. So it may come down till here and may recover, or from here also it can recover. If it recovers, very high chance it can go for 147% from here, and it is a very good dividend also they pay, and in the long term it's a very good company to hold. The next one is IDFC First Bank. Most of you guys are aware of this bank or invested already, but I just want to check because it's trading at a very cheaper price. Just 66 rupees. It actually came around like 60 rupees, and see how it got recovered. So this is the level, like 70 rupees is what the resistance level. It breaks, and very good chance like another 38% from here. And in the longer run, guys, this company is a very highly potential bank, and this has a potential to grow till here, which is 138 rupees, which is 66% from the current level. It's a like 72% from the current level. So this is very important bank. You don't miss this opportunity. So this is what I want to share for the Diwali event. Don't go in a hurry, don't go invest in this one. You first do your own due diligence and allocate whatever the percentage you want in each stocks. We put this as a basket. I'll share an Excel sheet also for you to allocation basis, or which one to have more allocation. So based on that also you can invest. I will share that Google Sheet link in my description, and make sure to track this one. If whenever chances comes, you have to rebalance your portfolio, which I cannot guide you every time, but you have to manage that part. And mainly this is for education purpose, so you have to do your own due diligence, understand the stocks company first, and then you start investing or seek your SEBI registered advisor. If you like this video, if you have any comment, please put your comment over here. If I said anything wrong, or if you have any point of view, do let me know. We can discuss on those things. And if you like this video, do like this, subscribe this, and try to share this video to a lot of people, your friends and family, so that I will get motivated to do more on this kind of videos. Thank you, and once again, happy Diwali to all.